Hello everyone, I'm Shivang Mehta. In this video, we are going to analyze Axis Nifty Small Cap Index Fund. NFO will be launched on 21st Feb. So let us analyze for which type of investors this NFO will be suitable and its basic details. So Axis Nifty Small Cap Index Fund is a mutual fund that invests in Nifty Small Cap 50 Index. It is an open-ended equity firm replicating tracking Nifty Small Cap 50 Index. Open-ended refers to anybody can invest in this NFO anytime and they can exit at any time without any load or any charges. Objective of this NFO is to achieve a return equivalent to Nifty Small Cap 50 Index, investing in the stocks of the companies comprising Nifty Small Cap 50 Index subject to tracking error. Nifty Small Cap 50 Index, it represents the top 50 companies selected based on average daily turnover from top 100 companies selected based on full market capitalization from Nifty Small Cap 250 Index. So basically, this 50 companies, small cap companies extracted from Nifty Small Cap 250 Index based on their average daily turnover and market capitalization. This index intends to measure the performance of small market capitalization companies. So basically, this index measures the broader market, and Nifty 50, the main headline index, measures the top large cap companies, and this index measures the broader small cap market. NFO details. So this is an open-ended fund and benchmark is Nifty Small Cap 50. Plan is growth and no entry or exit load on this new NFO. You can start with rupees 500 on riskometer. Risk appetite for the investor in this NFO is really high. And fund manager of this NFO is Mr. Jignesh Gopani. The NFO starts on 21st Feb 2022 and its end on the 7th March 2022, followed by allotment of units. Sectoral representation of Nifty Small Cap 50. So as you can see, 34% of the all stocks in Nifty Small Cap 50 are financial services. So there is high weightage granted to financial services, IT, consumer goods, and consumer goods. These are three dominating sectors in the whole index, followed by diversification in pharma, media, fertilizers, industrial manufacturing, chemicals. But the top, the most organized three or most organized sectors has been given top most weightage in this index. Let's see the returns of small cap 50, Nifty Small Cap 50. So basically, in this year, this index has given negative returns of 3%. In last 1 year, 42% of returns are extracted. In 5 years, 10%, and since inception, 11% returns. So we can make out that 11 to 12% return in long run Nifty Small Cap 50 Index can easily give. Top 10 companies in the index are Indian Energy Exchange, Central Depository, IDFC, Radico Khaitan, Multi Commodity Exchange, Computer Age Management Services, India Bulls, Happiest Mind. So as you can make out, in top 10 companies, there is considerable diversification in technology, finance, securities, or you can say banking, infrastructures. So the managers of index has tried to diversify as much as possible equally in at least in top 10 companies. Pros of investing in this NFO: has a diversified portfolio with investments in stock from various sectors. So with this NFO, you can diversify your portfolio in small cap and reduce the risk appetite and reduce the risk factor of losing money in this sector. Will be suitable for aggressive investors looking for small cap exposure. So aggressive investors who are looking for small cap exposure and want to completely replicate the performance of small cap from the market can invest in this fund. This fund is free from fund manager bias. So opinions of fund manager doesn't matter in this fund since it is an index fund. So that bias can be removed. If you are very apprehensive about the performance of fund managers in small cap, then you can go ahead with this fund. Cons of investing in this NFO: not suitable for conservative investor. As it invests in small cap companies having less stability and more volatility. So this And this small cap fund will be more volatile. So conservative investor who don't have that risk appetite to lose money in small term should not invest. As an index fund, this may underperform its index due to certain factors. So as it is index fund, it is not possible to replicate 100% the whole index. So there might be some error or differences as compared to index and index fund. This fund will not be able to deliver market beating returns. So since this is a small cap fund, and therefore it might not be able to give market beating returns like Nifty 50, which is a headline peer for this broader market fund. So you can consider 11 to 12% returns in long term from this fund, but in short term during high liquidity situation like last year, it comes. This index has also given 42% return. So you can expect that as well in few years over a long period of time. So the most important question at this point is, should you invest in this NFO or not? So suitable for aggressive investors who is not willing to invest in actively managed funds. So as I said, investors who are aggressive but apprehensive about the performance of actively managed funds or fund managers can go ahead with this fund. They can diversify their portfolio in small caps with this. For investors looking for small cap and mid cap exposures as well, this fund is not suitable. So anybody who's looking for exposure in large cap or mid cap, this fund is not at all suitable. Long term investments in actively managed portfolios can give better returns. So you have to also consider that actively managed funds over a long period can give much better returns compared to this one. Now it depends upon the risk appetite and the aggressiveness of the investor and what he makes out from the performance of this index over the years. He has to decide that he has to invest or not. Thank you.